Trump just flipped the script, freezing tariffs for the world, but slamming China with the biggest hike in history. Why? Just hours after triggering the largest tariff hike in a century, President Trump did the unthinkable. He hit pause. Markets were already in freefall. Allies were furious. And then, boom, a 90-day tariff freeze dropped like a bombshell. But not for China. Beijing got slapped with a staggering 125% tariff, as Trump doubled down on his toughest economic gamble yet. Wall Street roared back, China fired back harder, and in the middle of it all, Trump tweeted, "Stay calm, this is a great time to buy." So what's really going on behind the scenes? Is this a masterclass in negotiation, or market manipulation on a global scale? From secret meetings in the Oval Office to rising tensions in the South China Sea, this is a high-stakes game of economic chicken between two superpowers, and neither side is blinking. Stick around. This isn't just about tariffs. It's about power, pride, and the future of global trade. Trump shocks markets with sudden 90-day tariff freeze. Trump freezes tariffs on dozens of nations. Hikes China duties to 125% in dramatic overnight reversal. In a stunning late-night pivot, President Donald Trump announced a 90-day freeze on higher tariffs for dozens of America's trading partners, just hours after those very tariffs had gone into effect. At the same time, he escalated duties on Chinese goods to a staggering 125%. The dramatic shift came roughly 13 hours after the new tariffs were activated, triggering market chaos and fueling fears of a global recession. With Wall Street in panic mode and corporate leaders raising alarm bells, pressure mounted on the White House to reverse course, and fast. "I think people might be overreacting a little," Trump told reporters at the White House when asked why he pulled back. "They're getting a bit nervous, a little scared." His comments came amid a market rally the likes of which hadn't been seen since the 2008 financial crisis. The S&P 500 soared 9.5%, clawing its way back from bear territory, while the tech-heavy Nasdaq 100 surged an eye-popping 12%. Economists at Goldman Sachs promptly walked back their recession forecasts, breathing new life into an otherwise anxious economy. "We're having a good day in the stock market. As you can see, a record day. Actually, and hopefully, it's just the beginning," Trump declared later from the Oval Office. Bond markets also began to stabilize, cautiously. The yield on two-year treasuries briefly shot above 4% as traders dialed back expectations of interest rate cuts by the Federal Reserve. Trump revealed he had been closely watching the bond market as he made his decision. "The bond market is complicated," Trump said. "I've been keeping an eye on it. But if you look at it now, it's beautiful, the bond market. Right now. Still, last night, people were getting a little nauseous." Why China got hit harder? Trump raises tariffs to 125%. Now, all eyes turn to Beijing. Will China retaliate, or will it come to the negotiating table? Trump doesn't think he'll need to crank tariffs even higher to get talks moving. "I can't imagine we'll need to," he said. "I don't think that's going to be necessary." Trump shared that the idea of a tariff freeze had been brewing for a few days as he huddled with Treasury Secretary Scott Bessent and Commerce Secretary Howard Lutnick. "We didn't lawyer this up. We wrote it straight from the heart," Trump added. According to a White House official, countries that had been slapped with retaliatory tariffs as of Wednesday would now revert to the baseline 10% rate that had previously applied to other nations, China being the exception. Tariffs on steel, aluminum, and automobiles remain untouched, the official clarified. Likewise, 10% to 25% duties on goods from Canada and Mexico, outside of the NAFTA agreement, stay in place. EU imports, despite Brussels' threats of retaliatory measures, also hold steady at 10% for now, as the bloc has yet to implement its countermeasures. Later, Trump reiterated his intention to apply new tariffs on specific sectors, including pharmaceuticals. "We're going to be taxing big pharma, and they're all going to want to come back home," he said. The president unveiled his decision via social media, writing that over 75 countries had reached out to his administration, seeking negotiations. "At my strong suggestion, no retaliation of any kind," he emphasized. "I've authorized a 90-day pause and significantly lowered reciprocal tariffs to 10% during this window, effective immediately," he posted. Trump also said he would consider granting tariff exemptions to certain U.S. companies on a case-by-case basis, guided, as he put it, by instinct. Some companies, through no fault of their own, are in sectors that got hit harder than others. You have to show some flexibility, and I can do that, he noted. The steep tariff hike on China followed Beijing's announcement of an 84% retaliatory tariff on American goods. Trump's administration has long accused China of predatory trade practices and had been preparing for just such a clash. Given the blatant disrespect China has shown for the global marketplace, I am raising U.S. tariffs on Chinese goods to 125%. Effective immediately, Trump said in a follow-up post. Still, the president predicted that Chinese President Xi Jinping, or his envoys, would eventually come around. We're going to get a phone call at some point, and then it's off to the races, Trump said. It'll be great for them. It'll be great for us. It'll be great for the world and for humanity. Behind the scenes, how Trump's inner circle shaped the tariff pivot. Trump has long seen tariffs as a blunt but powerful tool to reboot American manufacturing and create jobs at home. But this sudden policy reversal raised fresh questions. Is Trump recalibrating for strategy, or simply reacting to market noise? Treasury Secretary Bessent framed the move as a win. The president has created maximum leverage for himself going into these negotiations, he told reporters. Bessent added that talks were already scheduled with officials from Vietnam, Japan, India, and South Korea. He's had the guts to hold the line this long, Bessent said. This was his plan all along. Market manipulation or smart strategy? Reactions from Wall Street and Capitol Hill. Billionaire investor and recent Trump supporter Bill Ackman praised the pause but warned against unchecked escalation. He called for a 3-month halt to interest rate hikes, warning of a self-inflicted economic nuclear winter by hitting both allies and adversaries with massive, disproportionate tariffs, and launching a global economic war against everyone all at once. We are destroying trust in America as a trade partner, a business destination, and an investment market, Ackman warned. Trump's tariff math, global fallout, and the de minimis crackdown. Trump's announcement came on April 9, 13 hours after the tariffs had taken effect. He claimed the new structure aimed to address decades of global unfairness. The rate, he explained, was calculated by taking a country's trade surplus with the U.S., dividing it by total exports, and having the result. His order also closed the de minimis loophole, which had allowed a flood of cheap, online-purchased foreign goods to enter the U.S. untaxed. While this temporary freeze focuses on correcting what Trump calls trade imbalances, earlier tariffs were designed to tackle issues like fentanyl trafficking and illegal immigration. The president hopes the measures will protect American jobs and spur domestic investment. But economists warn they may backfire, raising prices and discouraging business expansion due to the unpredictable nature of Trump's trade policies. Just days before the announcement, Trump and his allies denied any plans to freeze tariffs. When top White House economic advisor Kevin Hassett was asked on Fox News, he deferred to whatever the president decides. But as speculation about a possible freeze fueled a stock rally, the White House denounced reports, accusing journalists of misquoting Hassett and spreading fake news. My policy will never change, Trump thundered online. Still, Bessent insisted the president's decision shows he's open to honest dialogue. This signals President Trump's commitment to fair trade and our willingness to negotiate in good faith, he said, noting the 125% reciprocal tariffs were a ceiling, not a permanent fixture. Just hours before the surprise announcement, Trump had taken to social media with a message for investors: stay calm. This is a great time to buy. Everything's going to be just fine. Meanwhile, U.S. Trade Representative Jamieson Greer, testifying before a House committee when the news broke, admitted he'd been informed of the 90-day pause just minutes earlier. Representative Stephen Horsford, a Democrat, accused the White House of market manipulation designed to benefit billionaire investors. Who's really in charge? Because it doesn't look like the trade representative, the Nevada lawmaker said. You just had the rug pulled out from under you. In response, White House spokesperson Kush Desai fired back. The President of the United States has a duty to reassure the markets and the American people in times of uncertainty. Instead of taking cheap shots, Democrats should work with us to restore America's greatness. Trump versus Xi. Who will blink first in the global trade war? It's a high-stakes game of economic brinkmanship, and neither side is blinking. President Donald Trump has pushed U.S. tariffs on Chinese goods to an eye-watering 145%, in what he calls a necessary, transitional disruption. His gamble? That the sheer financial pressure will force Chinese President Xi Jinping to the negotiating table. But Beijing's message is clear: we'll fight to the end. The world now watches, holding its breath, wondering, who will blink first? Just hours before the highest American tariffs in a century kicked in, Trump told reporters he was waiting for a call from Beijing. Even as he juggled trade talks with dozens of other countries. They want a deal, Trump said. They just don't know how to ask because they're proud. But China's going to be cutting a big check to our treasury. Inside the White House, officials argue the leverage is on Trump's side, with China struggling to revive growth through exports while battling domestic oversupply. One senior aide said bluntly, "They need us more than we need them." Is this a trade war or economic Armageddon? But across the Pacific, Xi shows no signs of retreat. Beijing has slapped 84% tariffs on U.S. goods in retaliation, sending markets into another tailspin. A government-affiliated account on Weibo, China's version of X, warned that, "We don't seek trouble, but we're not afraid of it either," before adding, "The door to negotiation isn't closed, but it won't open this way." This is essentially the economic equivalent of nuclear war, said Christopher Bador, deputy director of China research at Decouple Dragonomics. It's hard to see how it could get worse. The deadlock has effectively frozen trade between the world's two largest economies. U.S. protocol favors direct leader-to-leader negotiations, while China's Communist Party insists on lower-level talks before Xi gets involved. Neither side is budging, and the risks are massive. For the U.S., the tariff hike could drive up consumer prices and reignite inflation just as the Fed tries to cool it. Trump, unfazed, declared, "Sometimes you have to take your medicine to get better." Stephen Miron, chief economist at the Treasury, put it more bluntly, the U.S. has the upper hand. Everyone knows it. That's why they should be coming to us with concessions. But the reality is messier. Container shipping costs from China are falling. Spot rates from Shanghai to LA have dropped nearly 40% since Trump's re-election, a sign that trade flows are adjusting. Meanwhile, the cost to China is mounting. Nomura's Ting Lu likened the standoff to a very expensive game of chicken, with unpredictable economic fallout. Premier Li Qiang remains publicly upbeat, telling EU President Ursula von der Leyen that China has ample tools to offset external shocks. But he notably avoided mentioning the government's 5% growth target. Chinese stocks managed to rally, buoyed by hopes of fresh stimulus. Xi, unlike Trump, doesn't face re-election pressure. He can devalue the yuan at will and unleash stimulus with a nod. An upcoming Politburo meeting focused on the economy could greenlight more aggressive support. Can the U.S. really decouple from China? Despite Trump's tariff blitz, decoupling won't be easy. Goldman Sachs estimates that 36% of U.S. imports from China can't be easily sourced elsewhere. In contrast, only 10% of Chinese imports are deeply dependent on American suppliers. Some U.S. sectors are even more reliant. Over 90% of folding chairs, artificial flowers, LED lights, and vacuum flasks come from China. Louis Cuis of S&P Global says China now needs to ignite domestic consumption, as exports make up less than 20% of GDP. But with property woes and sagging consumer confidence, that won't happen overnight. Ings Lin Song notes the cultural clash at play in China. Face and equality matter. Sudden aggression leads to retaliation, not surrender. That's not a productive strategy. During the first trade war, Xi refused to rewrite Chinese law at Trump's demand. No Chinese leader wants to appear weak, especially in a country haunted by memories of the century of humiliation. Tariff chaos, Trump's mixed messages and market shockwaves. Trump's cabinet insists the pain is worth it. There will be costs, but we'll come out stronger, he said in a Thursday meeting. The new 125% tariffs build on earlier sanctions tied to China's fentanyl links and cover items like solar panel materials. Markets reeled. S&P 500 dropped more than 6% before recovering. Trump boasted of a great day following a temporary 90-day freeze on tariffs for dozens of countries, signaling flexibility, at least for allies. Treasury Secretary Scott Bessent pointed to falling oil prices and a solid bond auction as signs the market was absorbing the shock. Still, Trump warned, if no deal emerges in 3 months, The reciprocal tariffs will come roaring back. Some countries run big surpluses. Some don't, so we'll be flexible. But if we don't get fair deals, the tariffs stay. Commerce Secretary Howard Lutnick added, "We're getting offers no one ever dreamed of before Trump." Confusion reigns. Posters at Trump's April 2nd tariff announcement didn't match the actual numbers. Then came a stunning reversal. Hours after tariffs were imposed, Trump froze them for dozens of countries, excluding China. Beijing struck back. It slashed the number of U.S. films allowed into the country and targeted U.S. defense firms in its unreliable entity list, a mostly symbolic move, but a clear signal. They don't want to negotiate under fire, said Derek Scissors, a senior fellow at AEI. Or if they do, it'll be quiet, and on their terms. Wall Street opened lower on news of renewed tensions. Yet Trump's temporary pause had briefly fueled the biggest rally since 2008. What's next? Allies, ASEAN, and the future of global trade. China is now seeking alignment elsewhere, courting Europe and ASEAN nations to build a counterweight. Xi will visit Vietnam, Malaysia, and Cambodia later this month, countries Trump has temporarily spared. Beijing has also urged companies like Shine not to diversify sourcing, fearing manufacturing migration. Premier Li stressed internal demand growth, while coastal provinces like Fujian aim to redirect exports to domestic markets. Still, deflation looms. Consumer prices fell for the second straight month in March. Factory gate deflation has stretched to 30 months, and the ripple effect from redirected exports could deepen the slump. Economists agree, Trump may have hit the limit of tariff leverage. There's only so much pressure you can apply before the returns start diminishing, said Julian Evans Pritchard of Capital Economics. A 50% tariff knocked 1.5 points off China's GDP in forecasts. A second round? Just 0.9 points. For now, Xi isn't blinking, and Trump, despite his bombast, might soon discover that economic warfare, like all wars, rarely produces clean victories. So now the question is, who will blink first? Trump's 90-day pause may have calmed the markets, but the storm is far from over. China isn't backing down, and neither is the US. Behind every tweet, every tariff, and every headline lies a deeper struggle for dominance, for leverage, for the future. What do you think? Was this a bold move by a master negotiator, or a dangerous game that could spiral out of control? Drop your thoughts in the comments. Whose strategy do you believe in, Trump's pressure tactics or Xi's silent resilience? Let's talk about it.